Okay, welcome to the best risk of ruin calculator. Now, why should you use a risk of ruin calculator? Well, number one, if you're already profitable with your edge, it helps you optimize it. Number two, if you're not profitable and you're still learning to trade and you're testing different edges, then you can use this to give you confidence. To give you confidence in losing and understanding that losing is part of the process. When you're focusing on a probabilistic outcome that has a positive expectancy in your favor, then you don't need to ever worry about losing, because you can never lose if you're controlling your losses and letting your edge and the probabilities play out in your favor. And this is the one thing that fucks everybody with trading. And I've got another spreadsheet for you here. I'm going to give this to you for free. It will be on the website, and there'll be a link below this video as well to get this sheet. It's super powerful, guys, and it will give you a lot of confidence in regards to understanding trading and probabilities and risk to reward as well. So how to calculate your risk of ruin. So we've got win rate, average profit and loss, which is risk to reward. We've got risk per trade. We've got number of trades. We've got maximum drawdown. So we're using this risk of ruin calculator as a max drawdown calculator, essentially, because if we've got an 80% win rate or a 70% win rate and we're profitable with a risk to reward, we're never going to blow that account. So we're never going to ruin it. So we're going to class our ruin as a certain percentage. So we can look at that and say, okay, with this edge, this is the maximum I can potentially lose on this account with winning and losing clusters of trades. So if we've got a let's start with a 60% win rate with an average profit and loss of 1 to 2. So that's risk to reward, remember, and we're risking 3% per trade, and this is over a sample size of 100 trades. Now, max drawdown, let's see what the chances are of us hitting max drawdown of 25%. Probably not much. We're only risking 3%. Now, if we're risking 3%, for the chances for us to get to a minus 25% balance with a 60% ratio is going to be low, because with a 60% win ratio over 100 trades, it's going to be very difficult to get X amount of trades in a row. We'd need, almost 10 losses there in a row, basically, to get down to the level of that max drawdown. So let's see. So we've got a 1.3% chance of getting that between the period of a high and low, and we've got a 0.43% chance of that happening from the starting balance. So the risk of ruin on this, hitting 25% drawdown, starting with a 60% win rate, winning 2 times the amount every time we win to what we lose, risking 3% per trade, we've got 0.43. So it's practically impossible for us to lose 25% of the account there. Now, if we have max drawdown 10%, now we've got 4% chance of hitting 10% of a loss on that account. Now, if we put an 80%, we can never blow the account with an 80% win rate, even if you're just winning one-to-ones, because it's impossible. You're always winning more than you're losing. And if you're always winning more than you're losing, it's impossible to blow your account, because how can you? You're always winning more, but you are losing at the same time. With an 80% win rate, you can still lose. There's still a chance for you to lose 5 or 6 times in a row over a sample size. That's what you've got to remember there. Very low chance, but there is still a chance for that to happen. Now, if we go on to this risk and reward spreadsheet here, I'm going to cover this spreadsheet in depth on a separate video, but this spreadsheet, guys, it's brilliant. So if you put your starting balance in here, so say, for example, 10,000, you're risking 1%, 0.01 in there is 1%, and over a 100 trade sample size, with an 80% win rate, you could expect to hit, you could expect to make $6,000 from there. Starting with 10 grand, risking 1%, so you're risking $100 per trade, you're going to make approximately $6,000 from 100 trades. Now, it's where risk reward comes in. And this is why I wanted to add it onto this video, so you guys can understand, when you're taking somebody's signals or you're copying somebody's trade ideas, if they don't trade like you, like if you're a person that likes to win more and you're more impulsive, then it's important you go for a higher win rate and a lower risk to reward. Because look here, you only need to make 6 grand. You only need 6K to win 30% of the time. So that means you're only winning 1 in every 3 trades that you're taking if you've got a 1-to-4 risk-reward ratio. And then if you've got a 1-to-5 risk-reward ratio, look at this. You've got to win 25% of the time. So you're only winning 1 in 4 trades to actually achieve the same amount as winning up here 80% of the time at a 1-to-1. And this is one thing that people always get confused when they're going signal groups, or people are slating professional traders. If you like to win more and take less losses, then you're going to have to take profit early. This is where so many people screw up. They're always like, oh, I can't take profit. I want to hold to the moon. And then they all try and hold the trades, and then they lose because you're not following a consistent plan. You either take profit at 1-to-1 consistently, you either take profit at 1-to-2 consistently, you take profit at 1-to-1.5 consistently. And if you don't, then you're never going to be profitable or make money. Because think about it, how can you? If you're like, oh, I'm going to take it at 1-to-4, and then you have 4 losses in a row, and you're like, it's getting into your mind, then you start taking profit early, and then you're chopping off the profit from what's supposed to be 1-to-4s, 1-to-5s, then you're just on a constant down streak like this, because then you're going to take more losses, and that's why you go down. So I highly recommend you use this sheet so you can see visually, number one, just how important risk to reward is. It's crazy. It's not it's not everything, but it depends on your trading style. And that's one thing that you've got to remember. It's all about trading style. It's not about who wins the most trades, etc., etc. I know so many people that are more profitable because they hold trades and stack positions. Sorry about that. But they lose 70% of the trades or 80% of the trades because they're looking for the big winners. And that's how a lot of hedge funds trade. They'll get into 20, 30 positions and hold them all. Some will go to the losses, some will go to the break-evens, but then they have the 1 or 2 runners that will pay for everything for the entire year. And that's where they get their profit from. So they'll have a 75% loss rate, 80% loss rate, but over the year, the winners have made 10x the losers. So that's what you need to keep into account. So you've got the sheet here, you've got the trade outcome here, and it will print you a graph based on whatever parameters you put in here. Super, super powerful. So I'll leave that sheet on the website, guys. You can load it. I'll leave instructions under the video. So yeah, that's it. Enjoy, and I'll see you in the next calculator video, guys.